Welcome back. I'm Pratap here. Today is the 22nd December 2023. If this is your first video at our YouTube channel, I request you go through the playlist Supply Demand Zone Price Action course, and you can click on this playlist. And here we are providing free training on the complete course on Supply Demand Zone Price Action, and all the videos are available under this playlist starting from lesson 1.1 until the most recent lesson. Even the upcoming lessons also will be placed under this playlist. I am also providing the link to this playlist in this YouTube video description, and even all these video links also available at our Telegram channel. Even the link to the Telegram channel also provided in this video description. So please make use of this opportunity. Now let us get into our analysis discussion, and thereafter we will generate high liquidity zones. And in this video, I will also explain how to trade during the last 1 hour of the trading day in case prices are entered into the high liquidity zone. Because we have seen one of the stocks from our yesterday's list, we got a trade almost during the last 1 hour of our trading session. Okay, now let us analyze the stocks one by one. And today, and when even before that, Nifty is entered into the supply zone. But you should not forget, none of these demand zone and supply zones are not having any zone achievement, because the demand zone is not having zone achievement because it is an all-time high demand zone. That means this demand zone is created before the supply zone, and this is a recently created supply zone. That's why it's not having any zone achievement. But if you want to make use of any one of these zones, they should get the zone achievement. So that's why we are waiting for one of these zones should be violated. Now let us analyze our yesterday's high liquidity zones. The first one is Apollo Hospital, and the prices did not enter into this fine-tuned area, so we did not get the trade. And next one is Eicher Motor. Even this is also we did not get the trade because prices did not enter into the zone. And next one is ZNFC. Even ZNFC also, the prices did not enter into the fine-tuned area. And next one is Titan. Titan narrowly missed the entry today. Prices entered into the 75 minutes area, but it did not enter into the 5 minutes or 15 minutes area where we fine-tune. Let me show you how we fine-tune. So this is the zone. We have a rally, we have base candles and a drop. This is what identified in our yesterday's daily high liquidity zones. So I went to the 75 minutes time frame. There we identified the fresh 75 minutes zone. This is the only one 75 minutes fresh zone is available here. We have a rally candle, base candle and a drop candle. Because the risk is high, we have to fine tune to 15 minutes level. So in the 15 minutes area, you can consider this as a ERC candle, and then you have a base candle and a drop candle and a follow through candle is also there. Why we are looking for follow through candles? Generally, if the leg out is not great, okay, that is okay, but not great, to confirm a good move in this from this zone, we look for the even next candle to check whether there is any follow through candle to confirm clarity about this zone. Same zone in the 5 minutes area also, you get the same. So we have a rally candles, base candles, and a drop candle. Further, you can fine tune by looking for type 2 entry to minimize the risk. This is the way you can fine tune at the 5 minutes level. But remember, there is already one rejection in this zone that indicates a strong order flow in this particular 5 minutes area. And even today also prices entered and then came down from here. Not today. Yeah, today only it's, sorry. Prices entered and then it came down. I can say see they have reached to this 15 minutes area. That means we missed the entry. Prices did not get into the fine-tuned area. But otherwise we would have got, if anybody would have taken trade on this 75-minute zone, it would have been a good profit. Actually, there is a one way, because see, look into this. This is a very strong, what to say, rejection is there from this. It's not the rejection, it's a rejection from, okay, let us assume in 1 minute or 2 minutes some demand zone might be there here. That way the rejection is there. But after that, prices didn't go beyond this. Generally, what we can do, we cannot consider this as a base candle because this is a ERC candle. If anybody wants to take a trade in this area, still they can do like this. They can draw a 15-minute zone. But actually, this is not a 15 minutes zone. But why we are marking? To confirm there is some activity is there. And whether is there any proper 5-minute zone is there in this area, then you can go to 5 minutes and you can fine tune. So here you can consider a zone like this in the 5 minutes area. You can draw a zone like this. But this is not a great, this is not a great leg out. This is a failed ERC candle. When you want to consider this failed ERC candle, you should have a dynamic view on this. And as a confirmation, we have follow-through candles are there. The failed, when especially when you are dealing failed ERC candles as a leg out, people who are not having a good experience, better to avoid failed ERC candles. The reason why I am saying you need to build a dynamic view to understand the failed ERC candle. And also you should understand the price action after the failed ERC candle. So that means we have a follow-through candles here. Why we are saying follow-through candle? If you combine the ERC candle and the next follow-through candle, is it looking like a leg candle? Yes, it is looking like a leg candle, that too a leg out candle, a valid leg out candle when you combine these two candles. So that kind of clarity you should get. That way you can consider and then you can take a trade. See, prices went there and then came down. Does it reach the 15 minutes target? Let us verify. So here it reached the 15. Here we have a rally, base rally. This is the first target. Mostly we exit in the first target. And even it reached the second target. That is the next 15 minutes. Most of the times we exit because we don't know how strong this demands. And again it will push the prices. That way you can consider. But this is a high risky trade. I can say this is an aggressive trade. Such kind of trades are aggressive trades. But anyway, I didn't consider this today because even the 5 minutes is there. Always we are looking for safe trades like a clear a 15 minutes structure. Inside the 15, we should fine tune to 5 minute structure. But if anybody wants to take, you can follow this kind of technique. Anyway, but we don't know. Today it is successful. We don't know these kind of zones, how successful they are going to be. Because there is no clear base candle. Actually, this is not a base candle. This is a ERC candle. That's why I did not consider this trade. But still, there is a way to consider. That is what I explained in this discussion. Maybe once you get some experience, good experience in the future, then you can consider whatever I explained in this area. Such kind of trades you can consider. You can name it as an aggressive trades. But otherwise, we did not get a trade in Titan. That's why I'm not calculating the profit and target and ROI. I'm not considering for this stock. Next one is AU Bank. AU Bank, we got a trade. First, let me show you, it is a 75-minute zone. Let me show you the 75 minutes. So we have a rally candle, base candles, and a drop candle. That way we have drawn this 75-minute zone. And here, deep inside, we identified a fresh 15-minute zone. So let me go to the 15 minutes time frame. Inside the 75 minutes, here we identified a 15-minute zone. This entire thing is 15-minute zone. So inside the 15 minutes, we identified 5 minutes. This is the 5 minutes. So what we did, we took type 2 entry. But this is almost very close to the distal line. Not exactly at the distal line, very close to the distal line. And moreover, if you look into these candles, from the distal line, there is a rejection. Next time again prices reached this area, there is a rejection. That means there is a huge activity is taking place. We got one test, we got another test. That means definitely just above this, there could be either a real order flow will be there. The real order flow we can identify as a high liquidity zone. Maybe it can be a high liquidity zone, or it can be a bull trap. Yesterday we have seen bear trap. Yesterday or day before yesterday. One of these days we have seen bear traps. Exactly the same way today we have identified a bull trap. What is bull trap? Suppose if this zone is violated, the 75-minute zone is violated, what we do? Our stop losses will be triggered because these are all the short trades. Our stop loss we need to exit from the short trade. When you want to exit for the short trade, you should go for long trades. That means bulls. All these bulls will be trapped by a supply zone just above this. But here in this case, there is a 5-minute supply zone overlapped with this 75-minute supply zone, the one I have drawn. This is a 5-minute zone. How this 5-minute zone looks like? We have a rally candle, 1, 2, 3, 4, 4 base candles. That means you can draw a zone like this. But look into the risk. The risk is very, very high. When the risk is very, very high, what you have to do? You have to plan a trade something like this. This is type 2. Initially, I have drawn like this. Let me tell you, then why there is a rejection from this area? That means just above that there could be something. What is that something? This entire area. That means the real order flow is there within this gap. Let me show you where the real order flow is there. See, between these two blue colors, the real order flow is there. But how we fine tune this zone? Just above the real order flow. How can we say there is a order flow here? Because we have seen the rejections from these candles here. The moment it reached, there is a rejection. That means somewhere here there is a real order flow. See again next time, that's why I have drawn a blue color area. So that means in this area there is a real order flow. From here prices are going down. Even if you look into today's prices also, they just entered in this area and again it came down. So that is the reason why you cannot go for type 2 entry. You must go to type 1 entry only. But if I go for type 1 entry, the risk is increasing. Suppose, okay, I want to go for a short as a bull trap. Because it is a bull trap, if prices entered into this area, I want to go for a short. But the risk is high. In case if the bull trap is failed, how much loss I am going to get? That is very, very important. I am going to get the loss beyond my expected risk area. What is the maximum acceptable risk? Up to 2% of your capital. So this is more than 2%. Now what I want to do, recently I explained a concept, a new way of doing supply demand zone trading. A new way. Let me delete and draw again. What is that new way? When you have two ERC candles, actually this is also looking, even though it is a base candle, but we can consider this range is also high, maybe a medium size candle or a little bigger than the medium size candle. So time being I want to consider this. How do you draw? The wick, the lower wick of the previous candle and the higher wick of this current candle. Let us assume this is the first candle, this is the second candle. First one is the previous, the second one is the recent candle. So previous candles lower wick and recent candles upper wick, between them you can draw a zone. That is a new way of identifying the zones. Previously once I explained this concept. Not once, twice I explained this concept. By using that concept, I want to draw the zone so that I can exactly find the where the order flow is coming. That way, I can identify my digital line and also I minimize the risk. Instead of drawing this entire zone as a demand zone, supply zone, instead of drawing a supply zone like this, I want to draw supply zone from here to the higher wick. This is the lower wick and current candles. Let me show you. Let me draw the zone. So I am starting from here and until this place, higher wick. This is the higher wick. So I have drawn the zone. Let me delete these blue color lines. And this zone's high value is my stop loss. This zone's low value is my entry. That is one possibility. Another possibility, because you identified a bull trap, you can combine this zone as well as the bull trap together as a single zone. This is your entry and this bull trap distal line is your stop loss. That way also you can draw the zone. That is also possible. But if you do like that, maybe your risk might be increasing. That possibility is also there. I have calculated actually the risk. It has come just 2.08 or something like that. A little over our accepted risk. So that way we can combine both, but still I want to consider both as a two separate trades. Previously also we have seen this kind of situation. See today what happened? The first zone prices entered. In which candle prices entered? At 9:35. Again it gave a second chance also. Second chance also at what time? This is at 9:45, 5 minutes candle. But what is our 15 minutes target supposed to be? This is our 15 minutes target. You have a leg-in candle, base candle, again a rally candle because there is a hidden body. There is a gap, you need to add a hidden body. That way you can consider. But did they reach? No. Prices did not reach to the 15 minutes. See here there are some pending orders. It pushed it down, but not good enough to reach up to our target. But what you will be doing? You will be waiting. But next, see what happened? Immediately prices turned up and this entire zone is gone. After that reached the bull trap we marked here. That is at the distal line of the 75 minutes and a little above that. So from there again prices are started moving down and finally reached the target. So to bring you some clarity, first let me delete this supply zone, the one that is failed. That means it is stopped out. Because it is stopped out, the zone alone has given a 1200 rupees loss, which is a negative ROA minus 0.8%. The 1200 rupees is equivalent to 0.8% on our investment. So we got a negative ROI minus 0.8. But immediately the next one, the bull trap, the moment you exit, fine. After that, when prices entered into this bull trap area, immediately you should go for another short order. That's why I told you there are two ways. You can keep an entry here and then you can keep your stop loss at the distal line of the bull trap area. Because they are very near, you can. But it's the total risk is around 2.07 or 08, something is there. If you still it crossed, still it is above 2%, you don't want to bear that much risk. You exit from this trade the moment the stop loss exit from the trade. Again the moment prices enter into the bull trap area, again you take another entry. So this is the stopped out one, let me delete. Now see they entered into the bull trap. Bull trap is at the proximal line of, at the distal line of this supply zone. And a little above that it is. So to bring you clarity, let me show you. So this is the way the bull trap is there. It spread a little a little above the zone. Let me delete the 75 minutes zone. Now you will get clarity. See from this area previously also see the rejection just before entering into this. Now it went inside up to this area. Maybe institutions might have added more orders. Next time see the rejection. As part of this rejection, they might have added again new orders also, we don't know. See, next time again prices just entered and came down. And before entering, they came down. And look into today, what happened. And today prices entered and from here prices came down and reached the 15 minutes target. And this is the way from the bull trap, the AU bank has given 12,900 rupees profit. And ROI, return on the investment, is 8.57%, 12,900. If you deduct the previous stop loss value, that is 1200, still you would have got 11,700 rupees as a profit. That could have been our profit. After that, this demand zone is broken and almost till the next demand zone, again prices very near to that. But anyway, we can't take a chance. Always our target is the immediately available one. So this is about AU small finance. The important learning from this stock is how exactly we are making use of the bull trap. Sometimes institutions will trap us like this. That is what we have seen in this stock. Even not yesterday, day before yesterday, we have seen bear trap. A similar kind of thing we have experienced in one of the stocks. I think it is yesterday only. M&M Finance, Mahindra and Mahindra Finance. We got a loss of 1200 rupees, but from the bear trap, we got 16,800 rupees profit we got. Same incident happened today. Similar kind of incident happened today for AU Bank. And next stock is Birla Soft. It's a very important discussion because we haven't discussed this point earlier. See what happened today. This was stopped out. When it stopped out, during last 1 hour of the trading day. Generally, you don't take trades, intraday trades during last 1 hour. But still, high liquidity zones you can take. The reason is within 1 hour is not sufficient enough to push the prices to 15 minutes target area. Mostly you avoid, still you may feel because 1 hour time is there. Prices entered into our fine-tuned area. And we want to make use of this opportunity. Why we want to make use of this opportunity? Because the structure of this zone is good. First, let me get into, because this is a 75-minute zone, let me get into the 75-minute zone. This is the zone. Some problem happened. Yeah, we have a rally, base candles, and a drop candle. This is the 75 minutes high liquidity zone identified from our yesterday's list. So what we have to do, we have to fine tune this zone. So that's why I went to the 15 minutes time frame. In the 15 minutes time frame, we have identified a rally candle, a base candle, and a drop candle. So that means you have to draw a zone like this, something like this. This is a 15-minute zone. So what is our goal? We need to minimize the risk. Second thing is we need to see the structure of the 5 minutes area. If the 5 minutes price structure is good, then only we want to accept this zone. Otherwise, this zone will be violated. So that's why we went to the 5 minutes time frame and fine-tuned this 15 minutes area. How I fine-tuned? Because here I identified a ERC candle. So this is I can consider, because by comparing with all these small candles, this can be considered as a ERC. And these two are the base candles, because this ERC candle is looking like a rally candle. So the highest wick of this lagging candle we need to consider as a stop loss. Okay, because the risk is increased now, what you can do, you can take the type 2 entry. So this is the way you can mark the zone. See here, today what happened? We got an entry. After that, where the prices are moved till 5 minute zone. Why we have to move till the 5 minute zone? Because after 2:30, it is not possible to reach, because volatility in the market is almost, it will go at the least level. By the time uh, market is near the closing hours, that is last 1 hour. Most of the times, I will not say 100%, but most of the time, last 1 hour of the trading is, you will be seeing less volatility. When there is less volatility, it is not easy to move the prices up to the 15 minutes target. That's why you have to take only a few intraday level trading, especially during the last 1 hour when you are dealing with high liquidity zones. You may ask a question, if I take a trade during the last 1 hour at high liquidity zone, can't the prices reach the 15 minutes target? It will reach, but they are the rare scenarios. Reaching up to the 15 minutes is a rare scenarios. But most of the times, what happens, if you are taking your trade somewhere during last 1 hour or last 1 hour 15 minutes time, that is after 2:15 or 2 o'clock or 2:15 onwards, if you want to take any trades, those trades you plan only for 15 minutes area. Definitely, there are higher chances to reach, sorry, not 15 minutes, 5 minutes. Definitely, there are higher chances to reach your 5 minutes target. It is like pure intraday trade. You have 5 minute zone, entry zone, and 5 minute zone, target zone. So that way it reached. After that, see the prices, how. The reason is this 5 minute zone is a high liquidity zone. This is a high liquidity zone. Because it is a high liquidity zone, the moment prices, see, already previously it consumed the pending orders, some of the pending orders, and the flow, the pending orders in this zone pushed the price down. Because volatility is less during last 1 hour, the push is only up to the next demand zone. And moreover, why prices didn't go below this? The reason is this 5 minutes is a high liquidity zone. This, moreover, it is a fresh zone and a lot of pending orders are there. See, the moment it reached the proximal, type 2 proximal line, see the rejection. After that, how fast the prices moved. And not only prices moved up, this existing supply zone, the fine-tuned supply zone in the 5 minutes is also broken, is also violated. But already it is tested. We have seen a rejection. This is the way this stock has given a profit. Birlasoft has given 4,250 rupees profit. And ROI is 2.64%. So you have to consider as an intraday trade rather than considering this as a our high liquidity trade. High liquidity trade targeting for 15 minutes zone. And there is one point you have to observe. Suppose a new high liquidity zone is created even in 5 minutes time frame. Even at during early morning hours like morning 9 o'clock, 9:30 or 10 o'clock or 11 o'clock, if any high liquidity zones are newly created high liquidity zones, they don't let the prices reach our 15 minutes target. They never let. See, this is the 15 minutes target. Even at morning 9:30 or 10 o'clock or even 11 o'clock also, they do not let prices reach here. Generally, if it is a normal zone, what happen? It will push the prices. Probably we may get one more entry, or maybe before reaching again this the real high liquidity fine-tuned area. Even before that, the prices again move back. It will violate this 15-minute zone. Then it will go down again. It will go up for some time, and then again it will come down, and it will reach the target in next 1 to 2 hours time period. It will reach the 15 minutes target. If this is a normal demand zone, if it is a high liquidity demand zone, even though it is at morning 9:30 or 10 o'clock level, what happens? This high liquidity zone again will push the prices up to this supply area, the fine-tuned supply area. Again this supply, what it will do? Again it will push the prices down. Again it will push the prices up. How long the fight will take place? One of these zones, the existing demand or supply is completely wiped out. That means completely the existing pending order should be completed. So whichever zone the pending orders complete, that will be violated. See, today we have got almost half of this zone prices entered and again came back. Because this is a newly created zone and it is very strong, it is having very strong demand, new demand. Next time, it moved the prices up. But here we got a small rejection that is not good enough to push the prices down. Because the demand is very strong, easily the next candle, this zone is violated because all the order flow is there in this fine-tuned area. Just above the fine-tuned area, there may not be much orders and easily prices moved in the next candle. But the real fight happened only the fine-tuned 5 minutes area and the newly created 5 minute zone. These two are real high liquidity zones. The fine-tuned 5 minutes area is having the high liquidity. Again, the newly created 5 minutes is having high liquidity. So that means there is a fight between high liquidity and high liquidity. That means high liquidity demand zone and high liquidity supply zone. And also there was an order flow somewhere here. The blue color line I have drawn. In that area there is an order flow. But I didn't find any zone, even though we can draw a demand zone like this, even a little above that area. This is a new supply zone, not demand zone. Even though you can draw a supply zone like this, a little above also there is some order flow is there. See, each time prices reached, push it down. Again went up and again push it down. Again went up, push it down. Again went up, push it down. See, again went up till maybe a little above also there is an order flow. That's why it pushed it down again. Again one more. This time what institutions have decided, they want to break this area, entire area. They created a new high liquidity zone here. They created a new high liquidity zone and prices went a little up. See the rejection, small rejection. Again within this zone there is a huge order flow. Again it pushed the candle. See, it pushed up. After that, the existing supply in this area pushed it down. And then completely all the orders in this area is completely gone with this candle. Now here again there is a high liquidity area. Because this is a high liquidity area, again it pushed the prices down. And again this is also a high liquidity area. Again pushed the prices up. That is what you should understand. And this blue color area, what we have drawn, there the real institutional pending orders are there. Probably around that area, maybe few paisa above that and few paisa below that, there is a complete order flow is there in this area. That's why we got these many rejections from this area. See, who can get, those who want to trade multiple times within this area, this is like a range bound within this area. You would have got multiple opportunities today. This is the first opportunity, this is the second opportunity, this is the third opportunity, this is the fourth opportunity. But fourth opportunity is not good enough to push the prices until this 15 minutes area. The reason is institutions now started creating a new demand from here. They keep on increasing the demand. Why they are doing like this? Because it is going to be the last 1 hour trading day. There won't be good enough to push the market in a strong way. That's why they have done some calculations, institutions. And that way they created and finally broke this entire zone, 75-minute zone. But what we observed the time also. What is the market trading time? And also we observed this is the high liquidity zone. Both together we decided the target should not be 15-minute zone, it should be only 5 minutes area. The high liquidity zone 5 minutes, that is our target. So that way we are able to get some profit even during the last 1 hour of the trading day. This is the way you have to plan during last 1 hour of the trading hours. If prices are entered into your high liquidity area, this is the way you can plan in case. Most of the time what we do, we ignore intraday trades. We ignore because we don't want to take during last 1 hour. But still it has given a clear profit. So that's why we are discussing about this stock. And the last one is Polycab. And we didn't get the trade in this zone. This is a 75-minute zone. Prices did not reach. So these are the stocks identified from our yesterday's list. Now let us generate demand and supply zones. Starting from yearly time frame. Let us find the stocks near yearly demand zone. So we didn't find any stocks. Similarly, yearly time frame, let us find the stocks any near yearly supply zone. Mostly you won't find. Okay, now let's go to half yearly time frame. Let us find the stocks near half yearly demand zone. So one stock we identified. In half yearly time frame, let us find the stocks near half yearly supply zone. So one stock we identified. Let's go back. Please remember, every time when you are getting into these zones, you need to pause your video and then you have to study the parameters. Because I am quickly moving, that is the reason why you have to pause. You should not forget that. And next one is quarterly time frame. Let us find the stocks near quarterly demand zone. We have identified one stock. Let's go back. In quarterly time frame, let us find the stocks near quarterly supply zone. So we identified one stock. Let's go back. Now let us identify for monthly time frame. Let us find the stocks near monthly demand zone. So we identified two stocks. So let's go back. Now entry time frame is monthly. Let us find the stocks near monthly supply zone. So we identified two stocks. Now let's go to the weekly time frame. So let us find the stocks near weekly demand zone. So we identified 7 stocks. So let's go back. Weekly time frame. Let us find the stocks near weekly supply zone. We have identified 3 stocks. Because today is the end of the week, let me show you even the stocks closed inside the zones also. Let us avoid the rest. Weekly time frame, let us find the stocks closed inside weekly demand zone. So these 14 stocks are closed inside the weekly demand zone. So let's go back. Now weekly time frame, let us find the stocks closed inside weekly supply zone. This is the filtered list. Let me scroll down. So total 35 stocks are closed inside the weekly supply zone. Now let's go back and we will generate for daily time frame. Let us find the stocks near daily demand zone. So we identified 7 stocks. Any high liquidity zones? Bandhan Bank is there, which is a fresh zone, high liquidity zone. That's it. We have only one stock identified from daily time frame near demand zone. Let's go back. For daily time frame, let us find the stocks near daily supply zone. So we have filtered 9 stocks. So any high liquidity zones? This is Nifty Auto. Apollo Hospital is there, already tested 5 times. Still prices are near the zone only. Even today also we looked into this stock, but prices did not enter inside the zone. Next one is Ashok Leyland. It is also a fresh stock. Previously also once we identified prices came near to this zone, but they didn't enter into the zone. After that prices went down and again they came back now. And next one is Astral. This is also already tested 2 times, gave 4 rejections, not pierced. And the last one is high liquidity zone, ICICI GI, ICICI General Insurance. It is a fresh zone. So these are all the high liquidity zones near daily supply zones. Now let's go back. Entry time frame is 125 minutes. Let us find the stocks near 125 minutes demand zone. So these 8 stocks are filtered. Let's go back. Entry time frame is 125 minutes. Let us find the stocks near 125 minutes supply zone. So these 10 stocks are filtered. Let's go back. Now let us generate for 75 minutes time frame. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes demand zone. So these 7 stocks are near 75 minutes demand zone. Any high liquidity demand zones? No high liquidity 75 minutes demand zones. I mean price near 75 minutes demand zone. So let's go back. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes supply zone. These 13 stocks are filtered near 75 minutes supply zone. The high liquidity supply zone, this is indices, Nifty FMCG. Supply zone, yeah, we have one high liquidity supply zone. Bank of Baroda, already tested once and gave 3 rejections also. We are looking for supply zones only. High liquidity supply zones, that's it. So we have identified only one, but that is already tested once and 3 rejections. So you should look for a fresh 15 minutes time inside this 75 minute zone. Then only you have to accept the trade. So these are all the high liquidity zones from 75 minutes time frame. I mean supply zones. Let's go back. Entry time frame is 25 minutes. Let us find stocks near 25 minutes demand zone. So these 11 stocks are filtered. Let's go back. 25 minutes time frame. Let us find the stocks near 25 minutes supply zone. These 3 stocks are filtered. Let's go back. We'll generate for 15 minutes time frame. Near 15 minutes demand zone. These 9 stocks are filtered. Let's go back. 15 minutes time frame. Near 15 minutes supply zone. These 6 stocks are filtered. Let's go back. The last time frame 5 minutes. Near 5 minutes demand zone. These 5 stocks are near 5 minutes demand zone. Let's go back. 5 minutes time frame. Let us find the stocks near 5 minutes supply zone. These 13 stocks are filtered. So this is about the list of the stocks near demand and supply zones for all the time frames. I hope this information is useful to you. Let us meet again in our next video. Thank you.